This belief that inflation's 8% is almost comical.
Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Almost comical. There's another thing I posted that some guy was just walking around a Walmart or something like that, and he was showing all the prices, and he said, I paid, that price is up 75% over the last 2 years, right? So the belief that inflation's 8%, we all know it isn't. Look at used car prices, look at any commodity, they're all up through the moon, and they're telling you that inflation's 8%. Yeah, I don't think so, and we all see it.
Right. Okay. So let's take the theme of inequality a little further. We got through the petrodollar system, but I don't think you really fully explained what would happen if the world completely de-dollarizes.
I think if the world de-dollarizes, the global economy will boom. Because right now you're sitting in a system that misallocates resources. We're pouring money into non-profitable businesses, Dogecoin, FTX, Tesla, right? So if the dollar falls, certainly there's going to be the biggest transfer of wealth in history, right? Because if the only reason all these companies trade at where they are is because the dollar is the global reserve currency of the world. And what that provides is it provides tremendous amounts of financing. If we lose that financing system, I could ask anyone, well, how much would you be willing to pay for a company that loses $44 billion a year? And almost everyone over the last, of course, I wouldn't pay anything. Well, then why does Amazon trade at $1.2 trillion? Because they lost $44 billion last year, right? And I could ask 100 people also, would you rather a company that earns 40 billion or loses 44 billion? And people think that's a joke. They're like, well, of course I want the one that earns 40. I want the one that earns 40 billion. Well, then why does Amazon trade at 14 times as much as Petrobras? Because it's not humans investing anymore. It's machines. It's moral hazard. Why did the machines win? Because they have no morals, right? So humans would have looked at Amazon at half this price and said, well, why would I pay $500 million for a company that loses money? And then it went up, and the humans all get fired, which gets to my opening scene of the gazelles eating the lions. When the Fed removes risk, they broke the ecosystem. Now the entire thing is broken and misallocating resources, and we all see it.
I see the rosy picture that capital will be allocated more appropriately, that the developing world will be perhaps a lot stronger. Maybe they can grow at a better rate. We'll have better allocation of capital, but isn't there a dark side to this too? I mean, whenever something goes wrong in the world, people say things, and you hear it all the time, and I don't think most people even understand what they're saying. You're like, we don't need military action. Well, we can just impose sanctions. So what's going to happen in a world where we have 4 or 5 reserve currencies operating maybe on a regional level? What do we do when there's geopolitical nightmares?
First of all, I don't think it's going to be our choice on who or where the reserve currency goes. It's going to be the countries themselves, right? The countries like India are basically saying, well, I'm just not going to buy US dollars. I'm not going to buy US treasuries and hold them. And honestly, Russia, Putin made a speech about that in June. He basically was saying that inflation has been 8% a year. So every year you're losing, if you're holding those treasuries, you're losing 8% a year, right? And so he was making that point. So there won't be a bunch of reserve currencies. I mean, right now there are a few reserve currencies, right? There's the euro, the dollar, the yen, and honestly, I think those currencies all work together to keep everything else down. So yes, there'll be a transfer of wealth, but understand right now that all the money is flowing to the 1%. It's not flowing to the 99, right? If we go off the dollar system, all of a sudden the commodities will go up. Like I think I've shown a chart in the past that commodities are at 120-year low versus financial assets. When you understand that the biggest commodity in the world is labor, you understand that all the money right now is just flowing to the top 1%. They have all the money. If we returned to capitalism and created a more level playing field, money would get spread out more equally. The economy would boom. We'd be allocating capital. At the end of money game, what we have is we have factories returning. We have, the end is a positive ending, not a negative ending. I think everyone's expecting a negative ending because the currency falls. What you're going to see is a return to manufacturing. The average person makes a lot more money. Labor rates go up. The distribution becomes more equal.
Of course, that's if people understand what's going on. I think you also paint another picture of how we sort of know how the movie ends when we see hyperinflation and bad things going on in the economy. And that's not the movie we want to see. We're hoping.
So I know how the movie ends. The movie ends like this. My coffee goes from $3 to $30. And everyone starts blaming the capitalists and turning into an authoritarian leader like Hitler to save. We're trying to, the whole point of making money game is to blame the central planners, Janet Yellen, Jerome Powell, and return to capitalism. If we return to capitalism, the entire system, you'll get a more equal playing field, and the entire system will start allocating resources better, and the global economy will boom. So what I was trying to do by doing Money Game and making the movie was to show that the system's broken, and that you're not living in a capitalist society anymore. And actually, we do it in a very interesting way. The villain in our movie is the CEO of the next big thing. It's like Twitter, Snapchat, TikTok, whatever. The name of the company is Tapit, which is hilarious. So anyway, the A and the P in Tapit form a, you can decipher what you believe that is yourself, but that's the symbol of Tapit. It's the A, if you think about TAPIT, that's our symbol, right? And so you're going to see that symbol throughout the entire movie, and that's our villain in the movie. So that's how it, and by the way, his stock is trading at infinite, right? So he's making hundreds of $millions. There's one scene in our movie, the CEO of Tapit, who, by the way, is just a phenomenal actor. I think he's like the next Leonardo DiCaprio. So epic. He's sitting there talking to our main character. They just played basketball. They're sitting in a locker room. And he's sitting there saying, James, he's got his fingers up like this. James, why do you believe my company is trading at $10 billion? And he turns, he goes, it's me, right? So you're trying to show the hubris. And he taps the head next to him who sucked at basketball and says, don't show up next week. And then he walks out, right? Because you're trying to show the hubris of these guys. Elon Musk, Dorsey, all these guys believe it's them. That's why the investors are buying. It's not why they're buying. They're buying it because the ecosystem is broken. It's machines now. So we're trying to show that hubris through an interesting movie, which through an incredibly entertaining movie. You're gonna see all the stresses from the CEO, because the CEO is he's gonna get a call. Hey, we're running out of money. He's like, don't pay them yet. Our IPO is going public next week, or whatever it is, right?
Yeah.
So we're trying to show all the stresses in the background, because what he believes is he's transitioning from the real economy to the financial economy where all stocks are worth infinite, right? So he's just trying to sell his stock, which we're seeing every day. Of course, I'm not going to tell you the ending, but it's interesting. It's fun. It's by the way, our film crew shot Coda. They also shot I Want to Dance with Somebody. So I can just guarantee you it's a cool film.
And three of your actors, I believe, are also from I Want to Dance with Somebody.
100%. Daniel Washington actually was amazing. He's our lead character. He's our professor who's in I Want to Dance with Somebody. Katie Lynn Johnson was absolute find for us. She's the love interest in our movie. We couldn't be happier to have. Our lead character James falls in love with Katie Lynn Johnson. So he's a widowed father of two. His wife died. He loved hiking the Appalachian Trail. You're going to see all his ex-wife in the background. Your heart's going to bleed for this guy because he's struggling to make ends meet. And then he meets this other guy who's making hundreds of millions of dollars on his new app, which loses money. We're just trying to show that unequal playing field.
Yeah, pretty crazy. Yeah, like I said, no resemblance to any actual companies that may exist in our current ecosystem. But I'd like to talk about something a little more tactical. I hope we don't lose any listeners or viewers at this point. But repurchase agreements, that's something I've been following for a long time. I don't think many people even really know what exactly is the repurchase or repo market. How does it function? Why is it so important? And how is it so inextricably entwined with the Federal Reserve?
So I think this whole cycle kicked off at the repo market spike. That was September 2019. So I remember James Grant from the Interest Rate Observer, who's a brilliant economist, talked to Rick Santelli on CNBC, and he was basically making the point that the Fed nationalized the repo market. So in September 2019, interest rates went to 10%. So repo markets are short-term interest rates. If short-term interest rates are 10%, well, how can long-term interest rates be at what they hit 0.66%? It doesn't make sense. So what the Fed did from September till January of the next year, they poured $10 trillion into the repo markets. And they what James Grant says, there were buyers left. It was just the Fed. Now, by the way, I just saw recently that Japan bought 97% of one of their tranches of debt. So it all comes back. So
Wow.
if they're buying 97%, where's the price discovery? Are these real markets, right? So the repo market spike kicked this whole cycle off. Just think about what happens if interest rates actually went to 10% on 31 trillion. That's probably about 70% of U.S. Tax receipts, just from paying interest, right? So they couldn't allow that to happen. So it comes back to print the money to trigger the revolution. Then we head into COVID. By the way, 6 months later, all of a sudden, COVID destroys demand for oil because everyone goes home. Nobody's out in the streets. On the exact same month that Saudi Arabia and Russia pour oil onto the market, and this is some sort of a coincidence, which sends the oil price to -37. My belief is that was a direct attack on the petrodollar system, right? Because if they can send oil prices to 37, it'll bankrupt all the U.S. shale companies. So I feel like that repo market spike, it was the one thing that really got me thinking, and that's actually why I wrote the $340 billion problem. And that is the time frame that I wrote it, because I saw that happen, and I said, this is significant. The ecosystem is changing, and that's why I wrote that. And then I wrote that paper right before COVID. I published it in February of 2020, and then COVID, which, by the way, drove all these things into hyperdrive. And then because things were so much in hyperdrive and it was so apparent that things were broken, that's when I decided to make a movie to explain it to the average American.
Exactly. It looks like two examples of perfect timing. Now, you have spoken a lot about not just Japan, but China. And this is one of the reasons why I love that white paper so much. I've been following China and Japan for a long time. I mean, China, you've got these ghost cities. I mean, these apartments, they don't even have plumbing. They don't have electricity. They're not even hooked up. These are shells of buildings, but people are investing in them because they don't trust the stock market. And you got Japan. And let me start with Japan. You state if negative interest rates and QE boosted the real economy, Europe and Japan would be experiencing rapid expansion instead of stagnation. What a devastating analysis. So you might think our economic elites would be listening to analyses like this, but it looks like they're actually following Japan. I mean, when Japan started doing things like quantitative easing, I mean, this was avant-garde. And now you're seeing it throughout the world, negative interest rates, the complete monetization of the debt you mentioned a minute ago, 97%.
So the US is spending all their money on BMWs and Canadian Goose, right? Whereas China is spending all their money to modernize their cities. So they're using cheap money to build 100 cities the size of San Francisco. Back 10, 20 years ago, China had probably one of the biggest ports in the world, one of the top 10. Now it has 9 of the top 10. So they have modern airports, they have modern buildings, they have modern everything. So we consume, and 70% of our economy is now consumption, which, by the way, think about that. When have you ever seen an economy led by government and consumption? Does that even make sense? Right? So why is that happening? It's because the dollar is the global reserve currency, and people have been accepting dollars for their goods until Russia said, we're not taking these anymore. And then they invaded Ukraine. Right. And why are they invading the Ukraine? Because they're trying to get natural resources. Ukraine supplies, I don't know, 20% of the global wheat in the world. By the way, the Ukraine is 4 times bigger in terms of farmland than the U.S. Midwest. So it's kind of the breadbasket of the world. Plus, they have all these other commodities. So that's why they invaded it. And I think you talked about the ghost cities, and the reason that what China is doing is they're seeing that the U.S. is mispricing real assets. If you can keep currencies strong, what you're doing is keeping commodities weak, right? So that's why I always go back to that chart. That commodities are at 120-year low versus financial assets. And by the way, not only are the commodities themselves cheap, but stocks on commodity can buy at 1, 2, 3 times free cash flow. As a matter of fact, I have this company that I own, Pantheon Resources, which proves to me that markets don't read the news. So they just put out there that they have 17.8 billion barrels of oil, of which they believe, and that's Schlumberger saying that, not Pantheon, of which they believe 10% is recoverable today. They think that probably goes up, but let's just assume that's 2 billion barrels. You're basically paying about maybe 20 cents a barrel for Pantheon. Why? Because the markets no longer read the news, right? That's how broken markets are. That you can see it. And what I say in a lot of my interviews is that if you understand that markets are broken, you're holding a crystal ball, because you all you have to do is read the news and see, okay, if you know that the rest of the world isn't reading the news, you can say, well, I can just buy Pantheon at 20 cents, but I have to invest in it. I can't expect all of a sudden that the price is going to pop, and because the quants and the passives are never going to see it because they don't read the news. So you actually just own oil at 20 cents a barrel. But it's just the most interesting time. But so not only are commodity prices themselves cheap, but also the commodity stocks themselves are cheap. I think like even U.S. Steel trades at 2 times free cash flow. Petrobras has a 65% dividend yield. YPF trades at 1.5 times earnings. I mean, I've never seen stocks so cheap. It's because it's being manipulated. Right. What they're trying to do is they're trying to drive inflation down by sending the signals that the dollar is strong. They drive commodity prices and commodity stocks down, and so they've never been cheaper. At a point where markets are, I believe that the eventually. So I also believe that the G7 works together. So we're seeing today in the news that Adiano, everyone's talking about Adani, which is a Indian company, it's getting hammered. So why all of a sudden is Adani getting hammered? Well, if you notice that the IMF had a meeting on October 10th to October 16th, and notice ever since then this Indian company is getting hammered. Why? My belief is because they probably met and they said we need to sanction India because they're buying Russian oil, and so they're just punishing India for buying Russian oil, and so you're seeing the Indian companies get hammered. So it's not because of fundamentals, just like GameStop or Tesla or Amazon aren't because of fundamentals, or the oil companies aren't because of fundamentals. It's because it's all geopolitical today.
Right. Like you said, if you understand markets are broken, you have a crystal ball. I kind of think, and I believe in your white paper, you go into detail in this, Japan could be our crystal ball. That could be what things look like if we continue to follow this path. Well, that is to say, at least until the system collapses, as you're predicting.
Well, Japan is like a bug right about to hit a windshield. Because think about it, there's never been a country that had, well, let's think statistically. There's been 52 countries in history that have had debt to GDP over 130% in history. Okay, there's only one of those 52 have not defaulted or hyperinflated. That's Japan. They're the only one. And they're at 250% debt to GDP, right? So why has that happened? Why haven't they defaulted? My opinion, because the system's controlled. I think Japan is kind of like the banker of the dollar system, right?
Right, I love it. I've got a YouTube coming out on that very soon. I believe if you only have to look at the top 13 countries, debt to GDP, Japan does top the list. You have all the pigs on the list. And the US is somewhere around number 11. And most of these countries, these are countries that are not doing very well economically or about to possibly even do worse. But one other comparative or geographical point I'd like to go back to, you did mention consumption. Like, why is America so consumption driven? And if you take a look at the countries that have the greatest percentage of GDP in terms of consumption, and a lot of these are over 100%. A lot of this, I think, is because of foreign aid, but you're looking at Somalia, Tonga, Marshall Islands, Lebanon, Sierra Leone, West Bank, and Gaza. And you know, I don't want to be disparaging, but I would say that these are probably countries that have difficulty keeping population, whereas a lot of the countries that have lower consumption as a percentage of GDP, you have Ireland, Qatar, Singapore, Gabon, Libya, Brunei, Luxembourg, and you go up a few more on the list, you get Switzerland, right? And I think if you ask people, you know, hey, I'll give you a free ticket to Switzerland. You can become a citizen for the countries on the top of the list. I think that probably we know how that experiment would work. Again, not being disparaging, but it doesn't make any sense. And the US is like 82% towards the middle. But again, it's not a great place to be. I mean, we think of the United States as being a world leader, but again, markets are not making sense. So can you help us make sense of this? What is this personal consumption as a percent of GDP? What is that really telling us? And how sustainable is it? How are we able to be so high on that list? 82.59%. I believe that's a 2021 figure.
Is that what our consumption is, 82%?
Yes. According to the World Bank.
I think it's a little lower than that, but that I believe it's because of the global reserve currency. As long as we can, I mean, our biggest export of the last 40 years has been dollars. Right. So as long as the world accepts the US dollar as a global reserve and there's always demand for dollars, then our consumption can be high. But understand also what we're doing is by being the global reserve currency, we're hollowing out our industrial base. Mm-hmm. We're losing all those industrial jobs. By keeping the dollar strong, we're losing all our manufacturing. We have no manufacturing here left. And we saw that during COVID. We were looking for masks and all these things and we couldn't get them. We had to buy them from China. I mean, that would be like outsourcing your energy to Russia. Imagine doing that. Imagine if you were German.
I don't know. Let's talk to some European leaders. Maybe they could imagine doing that.
So we're outsourcing. So Germany's outsourcing all their energy to Russia, and we're outsourcing all our manufacturing to China. What are we doing? Like this is why I say we're right towards the end of the system. If I'm right, then you're going to have the biggest currency shift in history. And there's going to be a massive transfer of wealth from creditors to debtors. In my opinion, owning cash and bonds or running to cash and bonds is like running into a building doused in kerosene, a burning building. Right? That's the last place you want to be. Why would you want to own it? Why would you buy a bond with a negative yield? So it's just one of the most interesting times I've seen. Did I lose it?
Yeah, pretty crazy. And here, how about just one more, just because it's so infuriating. I mean, the Netherlands, as I understand, just has tons of oil and gas and they don't want to tap it. But they'll buy it from Russia, essentially.
No pun intended. No pun intended, right? You didn't
Unbelievable.
Want to tap it. Right. Yeah, I mean, the ESG thing is also very interesting, right? Because what they're doing is they're pouring trillions of dollars, and you can see it. We're pouring $1 trillion to get ourselves off of oil. Why? Because Europe and Japan, two of the allies of the US, don't have enough oil and natural resources. It's not because they're trying to save the polar bears in Alaska. It's because the U.S. allies don't have enough oil, and so they need to get themselves off it over time. That's where we are. And so they're pushing this ESG, and you're seeing they're financing all these wind farms, these solar operations, electric vehicles. You're not investing in these companies; you're just financing it, and there's trillions of dollars being poured into this stuff without a return. So fossil fuels are the cheapest form of energy right now, by far, right? And we're in a sovereign debt crisis, and we're trying to go to a more expensive energy source. That doesn't make sense either, right? So all the things they're doing just don't make a lot of sense, especially during a sovereign debt crisis. So what we're in right now is we're in a sovereign debt crisis and an energy crisis at the exact same time, which in some ways is biblical because it's never happened. It's one of the most interesting times I've seen.
Pretty amazing. And yes, and I think I've seen some statistics over the last decade. I want to say we spent, I don't know how much, and reduced our dependence on oil by something like 1% of the total. Correct. And I mean, it's just crazy. And you have things like Germany, they're going off of nuclear. And talk about something makes me want to go nuclear. It's crazy.
Well, you also see companies like General Electric cutting their wind operations by 20%. Right. So if I thought, wait a sec, I thought we were all going to wind. I thought we were going to solar. Then why are they cutting because they're not profitable. Right. They're cutting all their staff because they're not profitable. So you're right. We've gone from 80% over the last 10, 20 years, whatever it was. We've gone from 80% of our energy demand were fossil fuels. Now it's 79. We've put $1 trillion to change that, and it isn't working. As a matter of fact, I think we might go the other direction now, because as General Electric cuts their staff, as we go off nuclear, as we go off all these other alternative energy fuels, fossil fuels could actually increase over time.
Right. Well, obviously, it's what took us out of the Stone Age. I mean, exaggerating only slightly, but it's
Well,
pretty frightening to think what would happen if we, can't continue the system before we find some alternatives.
if we didn't have fossil fuels, you would hope that someone would invent it.
Well,
Right?
that's true. It occurs to me that we didn't really need subsidies to get off of horses, right?
Right.
People didn't like poop on the streets. And so we
Correct.
found something cleaner, fossil fuels. And it
Correct.
only seems like it isn't clean because we're looking into the future at some idealized situation in which we have electric cars, and hopefully they're running on nuclear and not coal burning. But
well, you also have massive organizations. I mean, most of the money is controlled by these big organizations now, right? It's not we don't have millions of independent thinkers deciding where they want to put their money. That's called capitalism. What you have, all the money is flowing to companies like BlackRock, Fidelity, which, by the way, are all pushing ESG, right? And so they're basically trying to push to their clients ESG. I would question: are those companies still fiduciaries? Are they pushing their own political agendas, or are they investing for you, or are they pushing their own political agendas, right? Which is ESG. So I don't think a lot of those companies are fiduciaries any longer. I think everyone needs to start looking out for themselves and looking out for their own money, because it's all moral hazard. So just think about, like, the top 6 firms control probably 80, 85, 90% of all money. And that's why you're seeing all this money flowing to ESG. But every CIO on the planet is also pushing ESG and pushing ESG funds. Well, are they pushing it because there's a great return there, or are they pushing it because it's their political agenda?
wow, I feel like we could do a whole hour just on that.
100%. 100%. There's so many topics right now, and that's why it was so important to produce Money Game, to show that it's that the system is completely broken and nothing makes sense. And the biggest point we make is that the ecosystem changed. It's not humans anymore investing. When people are always saying, who the hell is buying Tesla? Who's buying GameStop? What, are they all crazy? All they need to do is look in the mirror, because they're probably buying index funds. So,
Yes.
so when they say, who's buying this? I say, just look in the mirror. It's probably you. You're buying index funds.
Yeah, I love it. I love it. I wonder, could we possibly sum up your white paper, the $340 trillion problem? Possibly you could say that never before have so many benefited so little from so much debt, that is.
100%. So the $340 trillion problem is the sum of all debts that are out there. If you include
in 2020,
in 2020, if you include derivatives, it's in the quadrillions, right? Here's the interesting point: gold. So in Money Game, we're going to be showing the ecosystem. You're going to see random things in there. You'll see the lion in the opening scene, right? Because the lions get eaten by the gazelles. You're going to see, which is, by the way, that's active managers. You're going to see the rhino, because they're they're going to be watching CNBC, and they're going to say, save the rhinos, and they have a gold coin. They're trying to get you invest to actually save real rhinos in the real world, right? But they're showing gold, right? And what we're trying to show is that save your gold. You're going to see the professor is going to say the Reddit guys finally figured out how to trigger the stampede of wildebeest. Trigger the stampede of algorithms. Just aggregate a bunch of buyers. We're referring to wildebeest, right? They're going to go to a concert, and you're going to see Cheetah Coin. It's like FTX or Dogecoin or wherever else. And so you'll see all 4 of those things in the ecosystem. The one thing you'll never see is the real economy. So, which is the elephant in the room, which is our main character. So to sum it all up, understand that gold is only $12 trillion worth of gold in the world today, and yet there's quadrillions of derivatives and debt that's on that. Gold is the only one that doesn't have a counterparty risk. If we run into counterparty risk, like you did with Lehman, like you did with Bear Stearns, and like you could with Deutsche Bank or Credit Suisse, which is 4 times as big as what it was in 2008, we've got some real issues. You better be saving your rhinos.
Right. Yeah, I love it. Just like what is it? De Nederlandse Bank. Your Dutch central bank is holding on to its gold. Maybe some others should take note of that.
Correct.
But okay, we talked about a lot of things like the fact that we have a lot of personal consumption expenditures in our economy. It's a large proportion of the total. That's kind of out of whack interest rates are way out of whack, asset prices are out of whack. I don't know if we explicitly discussed, though, the size of the financial sector, the financialization of the economy. I think that's sort of a rubric under which much of what we discussed today could go. There's a pretty amazing example of that in history. It's a recent example, and that would be Iceland, right around the time of the global financial crisis, a country where the financial sector grew tremendously. People were leaving their jobs in all their walks of life to go work in the financial sector. Of course, that ended really badly for Iceland, as it did for many other countries.
I mean, it just comes back to the money game, which is when interest rates fall, asset prices are high. With a $1 paid annually, at 10%, it's worth $10. At 1%, it's worth $100. When interest rates go negative, it's infinite. So that's where we are, and that's why I believe we're at the end of the dollar system, because they can't allow interest rates to go they can't let interest rates go to 10%, or you'll with $31 trillion in debt, that's $3.1 trillion in interest expense alone, and the Fed only brings in 4.5. Now consider this also, the Fed brings in 4.5 after a bubble, right? What happens if there wasn't a bubble? The only reason they were able to bring in that much money is because there was a bubble, right? Imagine if actually stocks were actually falling, they wouldn't be bringing in 4.5 trillion and interest rates would still be at 10%. So we're living in an insolvent country, right? The system is insolvent. And so they're being desperate. What they're doing is desperate to bring in those tax revenues. So they're going to try to maintain it, maintain the value of those assets. But by maintaining the value of the assets, what they're doing is they're pushing all the money to the rich at the expense of the poor. So we all know that at the end of the day, capitalism benefits everyone, but this isn't capitalism. This is a centrally planned economy. So if we return to capitalism, you're going to see a massive transfer of wealth from creditors to debtors. Think about that. If I buy $1 million house and I put $100,000 down and the currency crashes, at the end of the day, I own $1 million house, right? So it's just a transfer, but the creditors lose all their money. And that's why I say if you own cash and bonds, if you're running to cash and bonds right now, it's like running into a burning house doused in kerosene. Because it's the place you don't want to. During a sovereign debt crisis, you're sitting in a sovereign debt crisis. You're in a sovereign debt crisis and an energy crisis simultaneously. The last place you should be running is cash. And we say that in the movie. The professor they're at a bar, and James, our lead character, says, "What should a guy like me do?" And the professor says, "Buy real assets. They've never been cheaper. They're at 120-year lows." What type of assets? Like copper, steel, oil, take your pick. How about real estate? He's like, "Yeah, real estate works." He pats him on the back and he walks out. So we're showing it, right? We're showing all these things because, and by the way, real assets have never been cheaper. And it's funny to see people are saying, well, the reason that they're always trying to put a reason behind things. Well, the reason GameStop went up is because, and then they fill in a narrative. The reason Petrobras has a 65% dividend is because it's Brazil. As if we should be worried about Brazil, as if Brazil's not a capitalistic system and that you can't invest there because it's too dangerous. But what they're doing is they're assuming markets are efficient, but they're not efficient, and we're watching. So I know for me, I own Petrobras. I collect my $7.50 dividend every year. 10 years, I'm going to have $75. The stock trades at 11, right? And I still own the stock after that. So it's just so interesting to see that people are avoiding the cheap stocks because, well, the market doesn't like them or whatever else. It's like, so they're avoiding companies that make money. It's so interesting. It's such an interesting, and they're avoiding them because they believe markets are efficient, but markets aren't efficient.
Right, and they've never been more inefficient. I think one of your quotes is that when you realize that, then the whole system makes sense.
When you manipulate the most important statistic in finance, interest rates, stocks disconnect from fundamentals. And that's kind of the thesis of the $340 trillion problem. And people still believe markets are efficient. And even Pete Davidson is seeing that markets aren't efficient, but the financial professionals are still telling you markets are efficient. And and that's why it comes back to my opening quote: the task is not to see what no one else sees, but to think what no one else has thought about that which everybody sees, because we're all seeing it. And it's one of my taglines for my hedge fund: we all see it, right? Everyone sees it. Well, how come it's not reacting? Because because the markets are all machines now. It's not people. So you need to take personal responsibility for your own investments more so than any other time. If you're relying on the S&P 500 index or some financial manager wants to diversify across all these asset classes, just be careful. Understand at the end of the day, it's you're the lion. We're trying to create lions, right? At the very closing scene, you're going to see a lion return, right? And we're trying. Imagine reintroducing a herd of lions back into the savannah with the gazelle population that has exploded 10x and is competing for scarce water and food. They make a killing, and that's the point. We're trying to create lions in this movie.
Well, I think we got to wrap it up. This has been amazing. I wish this was the Joe Rogan show. We could go into hour 2 and we could start talking about some more comparative examples, et cetera. But we got to know, what is your ETA? So the movie's already been shot, and basically you're just waiting for the ideal moment to release it. What's your current ETA?
No. So our last thing is composing. We just signed Daniel Hamu, who did The Nutty Professor. He's done Anastasia, The Water Boy. He's done 30 different movies, and he's putting the music to it. Then we'll need a month to sync the music to the movie. And the whole thing will be done in May. I know that people are going to be watching this 100 years from now saying, why were people buying GameStop? Well, everyone knew they were going backwards. Why were they buying Tesla? Why would anyone pay $1 trillion for a company that loses money? Like, why were they buying Dogecoin and FTX? And they're gonna so this what I try to say is this movie will timestamp the biggest currency transition in history, because it'll be hitting at the exact same time that the currency is transitioning.
Great. So I want to make sure we don't miss this. So then May is when you're complete with composing, et cetera, and then you expect to be releasing in.
I would guess around November. It won't completely be my call because we'll probably be going through a company like Paramount or something like that. Understand also that our film crew shot Coda. They shot I Want to Dance with Somebody. So it's a quality film, and I think we'll probably be going. So it depends on who we agree with, whether it be Paramount, whether it be Disney, whether it be whoever else it is. It'll be on their schedule, but I would guess it's around November that it comes out.
Just one for those raising capital. Do you have any tips for approaching family offices? I know you very famously approached a family office that I believe put $1 billion into your Fidelity fund.
Right. Yes, I did. I probably can't see who that was, but yeah, we had $1.2 billion with one family office. I mean, in total, my fund had $7 billion in assets.
Right.
So, I mean, what I would do, honestly, I don't believe that understand that 95% of the stock market has benefited from low interest rates. It's because what you had was you had a strong dollar with no inflation. I believe we just had a paradigm shift to weak dollar inflation. So only 5% of stocks, real assets, are now going to outperform from here on, right? And so that's why I don't diversify across things. Why would I sell a company with a 65% dividend like Petrobras and buy a company trade like Disney, which trades at 1,100 times free cash flow, right? Why would I do that? I mean, Disney trades like $400 billion, I think it is, and they had $100 million in free cash flow the last 4 quarters.
Right.
So why would I diversify into that, right? I'll just collect my dividends from the real asset companies, and so that's what I'm trying to say from the movie. People have to take personal responsibility for their investments more so today than any time in history. If you're believing that some financial advisor has your best interest, or all these big companies, they're just trying to. The big companies like BlackRock are just trying to fill their political agenda. By the way, BlackRock is also in the movie, right? We've right at the beginning of the movie. You're showing BlackRock, you're showing Vanguard, you're showing all these big companies that control the entire system right now, but they no longer have they no longer have your back. You need to take personal responsibility for your own financial freedom these days.
All right, awesome. Now, how can we reach you if you want to learn more about Chris Galizio? I know you've got a lot of things. You got the movie coming out. You've got your hedge fund, et cetera. How do we reach out to you?
So first of all, I post all the time on LinkedIn. I'm a real person. If you text me, I'll text you back. Right. So connect with me under Chris Galizio, LinkedIn. My email, if anyone wants to send me an email, cgalizio@comcast.net. I'm just a real person. Like all I'm trying to do is change the world. I'm trying to return the world to capitalism. I'm trying to show you that you're living in a centrally planned economy, and I'm trying to return you to capitalism. It's going to take real people to change the world. It's not going to be these phonies that whatever firm they're at. It's going to be real people. If you text me, I'll get back to you.
Well, I guess we're looking forward to finding out what's going to happen when that tawny, scrawny lion is reintroduced to your ecosystem. So
the lions of the future are going to make a killing.
All right, love it.
All I'm asking people to do is think for themselves. That's it. If you're a lion, you're going to make a killing in the future because you're holding a crystal ball.
Awesome. Thank you so much, Chris.
All right, George, nice chatting with you. I hope we can chat sometime soon. Once I get the trailer out, we can do another conversation.
Awesome. Looking forward to it. Phase 2.
Thanks again.